Hello and welcome. Today we're going to talk about the 15 minutes ORB strategy, and this is going to be in English. So I know a lot of you requested the video concerning the ORB strategy, and this here is the video concerning ORB strategy in English. So I'm going to go through the every basics concerning the ORB strategy, everything you need to know about the ORB strategy, and especially the first 15 minutes of the session. So we're going to talk about that, and I'm going to give you a lot of examples on how to trade this strategy. So welcome. As you know, this is my full mentorship program. If you want to know in detail, you can just follow up on my WhatsApp. The number is in the description, and you'll be able to see what you will get on my masterclass mentorship. And we have a lot to learn in there. People are enjoying, people are studying, and it can be even you also. You can join and be able to learn everything I know about trading. All right, so what is the 15 minutes ORB? So ORB stands for opening range breakout, okay? Opening opening range breakout. So we are trading the opening range of the session, and we use that opening range as our POI, meaning we are using this opening range as our point of interest for us to trade the coming the rest of the session, right? So you can use this on any session you want to trade, but due to my experience, I'm gonna give you just more examples on New York session because that's the one I use to trade most of the time. All right, using this strategy. So I'm gonna give you more examples on that New York session, and you can see if it works out on other session also using the same steps. So what do? We mark out the first 15 minutes of the session. So the first 15 minutes candle, we mark out the high and the low. And what we are doing now is we wait whether we get a closure, a body closure above or below. All right. And then we take the retest as our entry. All right. Simple like that. Or we wait for the market to sweep liquidity. Maybe it can be only by weeks. And then we take the reversal towards the next point. Sweep the liquidity. And then we take the reversal. Simple like that. All right. So what we do is we mark out the 15 minutes and then we drop to the universal time frame. The universal time frame are the 5 minutes, the 3 minutes, and the 1. So you choose which one you normally use for entries. Myself, I usually I trade gold on 1 minute. So you switch after marking the first 15 minutes, you switch on to the 1 minute to look for the supporting structure after the break of the high or the low. All right, that's the easy step. That's the easy step. So when you have a break and you have a retest, you can take even the supporting structure like that. Or when you have a sweep of liquidity and then you have maybe a change of character with inside formation, you take that to the reversal move. Simple like that. And sometimes you may face something like this. You have your 15 minutes and then the market breaks in, you take the trade, and then comes back again, breaks in, you can take another trade for reversal. But simply, this is your point of interest for the entire uh, session. But mind you, due to my experience, I found this strategy working only in a 2-hour window. So starting from the first 15 minutes to the 2 hours after that, you need to stop everything, because after that, the market is so unpredictable using that POI. All right, good. So let me go to the chart and explain a little bit more and give you a lot of examples on how you can trade this strategy. All right, so I'm going to give you the examples for the whole week, okay? Starting from Monday last week. And I'm going to give you the examples each day from Monday to Monday, how we could have traded this ORB strategy, the 15 minutes. So due to my time zone, all right, due to my time zone, the first 15 minutes opening range breakout starts in 4 p.m. 4 p.m. This here is our ORB candle, and this is our opening range breakout. Now, what do we do is we're going to mark out the high of the candle, and we mark out the low of the candle. Simple like that. So these two lines are the ones giving you the instruction on whether to do what for the whole session, for the whole range. All right. So now what you do is after the candle close, you drop to the 15 to the universal time frame. In this case, I will be using mostly 1 minute because that's the time frame I use all the time. And we see whether the market close above or close below, and we take the trade. All right. Now look at this one. The market closed above and then retested this area of liquidity here. And remind you, you must also observe the structures. Okay. Do not just trade blindly. This is your point of interest, but also look out the details. Okay. The details like that. Sorry. Now, so the market tested this one and it came back and closed inside. So what happened now is we look for the supported structure to sell towards the other part of the range. Now we had this break inside here. We take entries in the liquidity engineering. You can take entries in the liquidity engineering there, here, and from that point you get this 100 pips from range to range. And of course, we had another break in outside the range. We had this break here. The market retested back, but it's kind of consolidated, and then we break again. We break even this structure below here. So when you see this, you normally know that, okay, we need to sell. You look for areas to sell, all right? You look for the areas to sell. We have another liquidity engineering here. You can use that. For those who know, um, major key levels, you can use that one. And any entry of your test, whenever you see it, maybe you are using trend lines, maybe you are using the Fibonacci, the SMC entries, whatever the entries you're using, maybe simple price action, you just use that according to your test. And then boom, we get another entry there. And we get another break of structure. We get to see another entry again. The market went down. So that was the day. Within the first 2 hours of the session, you already get a lot of entries, but you used this point of interest as your as your area to consider for you to take those entries. Let's see another example. All right, so the next day now. All right, the next day. This was Monday, this was Tuesday. Now on Tuesday, also we wait for our opening range candle. This one here, 15 minutes, the first 15 minutes, we mark out the high, we mark out the low of the candle, including the wicks, okay? Including the wicks. And what do? You go to the universal time frames, and then you see whether market, if it breaks outside, whether it's upside or downside, you take the entries accordingly. So, like I said in the first example, you should observe the structures behind. So remember, we had this change of character with inside formation. So the market braked to the downside and entered to this area of liquidity here. So I remember I got a loss in this entry, but I recovered it, and I'll show you how I recovered it. All right. So we had this break, and the market went up and retested again and again. We had like a sort of a consolidation. I didn't see any clear entry. Okay, I didn't see any clear entry, but after again the market went down, trying to break this swing point, and then went back again, closing inside, and then close to this structure here. So I said, okay, I might take a retest to buy, and of course I bought using this liquidity engineering. For those who know, for those of my students, they know this is compressive liquidity engineering. And I took an entry here. It was like 100 pips. And I put my stop loss to the break even. And then later on, the market came back with a huge momentum and took me out. And then retested to this area of liquidity. And then we had another breakout to the level, to the range, inside the range. And when you had a retest, and then I said, okay, I'm gonna wait for the confirmation to buy because we break inside. All right. Now we had this here. This is our change of character, and we had this inside formation. See that? This is inside formation. So I took the entry there. I took the entries there again towards this other part of the range, over 200 pips, and then we took that in. And then we say, you see, we break another, but the 2-hour windows were already over, and you can still trade using that POI, but I don't suggest to do so. Where those 2 hours are over and you didn't get any entry, you just have to be patient and wait for another day, right? So yeah, that's it. Let's check another day and see. All right, another day. This is now Wednesday. We traded Tuesday, and now this is now Wednesday. The Wednesday, again, we wait for our opening range breakout. This is the candle here, the 4 p.m. candle. And then we mark the high, we mark the low, include the wicks. Again, include the wicks. And then after that, you drop out to the universal time frames to look for the breakout and retest to the level. Now, I remember trading this day, and we had a break to the downside. The market did not come to retest it. So we had a huge momentum, and this is actually based on the news this time. Normally we have a lot of news, and we had this area here. The market created this area, the breakout structure here, and we entered on the retest level right there. So we took this entry, and myself I targeted 100 pips somewhere there, but I remember others holding these entries all the way. But you see, the market created another structure here, change of character resistance formation, and then the market took that, it went up, and then it came back to the retest level of the range. It failed it retested to the level, came back, retested to this structure, it went back again and closed inside. So we had this like ups and down, but remember the hour window from 4 p.m. to 6 p.m. it was already over. So you can see a lot of uncertainty you can get to this point. Now, mind you, this, due to my experience, use those first 2 hours to trade this. If you don't get any entry on that hour window, don't bother. Wait for another day because the market will always reward you. It will reward you. Okay? You have to be patient. You have to be patient. Let's. All right. Now, this is another day. This was Thursday, and we traded that Wednesday. Now this is Thursday. Now look at what happened. We first mark our 15 minutes, the first 15 minutes opening range, and we mark the high, we mark the low. This is our candle, right? We mark the high, we mark the low. And then after that, we just wait. We drop to the 1 minute or whenever the time frame, maybe the 3 minute or the 5 minutes, depends on your test. Actually, I don't even bother. You can use any time frame from those universal time frame. And look at what happened. The market went up, failed to break by body, and then after failing to break by body, do you remember what I told you? I said when you see this, you just wait for the market to shift inside. So look at that. That was the shift, and the way it shift, this is with a sudden break. For those my student, this is a sudden break, and we know that the market will not go even higher than that. The market will just end up to the area of break. What happened? We took that entry from there, selling toward this. You can sell toward this range. It was 30 pips, but the market even went lower than that. You can see we break again, and then the market retested again. You can take that entry again, and it went all the way to 200 something pips. See, 200 something pips. It was a nice trade, actually. It was a nice trade. But just by using these two lines, those two lines, no more than that. You can take the profits here, but you still be fine. Right? Simple like that. So let's get another example, the last example for the Friday. All right. So this was Friday. All right. This was Friday. Our opening range breakout was this one, our opening range candle. We mark the high, we mark the low, including the wicks. Okay. Including the wicks. Now we drop out to the 1 minute. Now I remember this day was so confusing, but it's easy. You know, we need just to deal with the details, okay? The details. So the market breaked down with the body. It went back up again. It came back again. So it was, we didn't have any clear structure for us to buy or sell. All right. I never trust this structure like this. This was actually a change of character to buy, but I didn't do that because I know structures like this here, you know, sometimes they work, sometimes they don't. So I didn't do anything here. So the market came back again, break inside, but failed to break this like a swing low here, and then came back again, break inside. So we had a lot of break in and out during that time. But we had a very big volume due to the news, and when we closed upside, and then the market created as a structure, the outside formation. For those who know, this is an outside formation. We take that entry. But if you're trading opening range breakout, I suggest when you're trading like an outside formation like this, it's better to place your stop loss a little bit low, maybe to the range. It's high, but sometimes the market reaches to the range and then it goes to the way. So you have just to to be careful on that. So look at that, 300 shy, 300 shy, even 500. Look at that, 500 pips, and this was backed up by the news, right? Boom, 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 boom. So this is what you do every day. You can just use this same strategy to make sure that you grow your account steadily, day to day, day to day, day to day. All right? A very easy setup, a very easy strategy. All right? For those who have any question, my number there is below to the comment section. You can ask. You can ask me directly to my DM, my WhatsApp number. And if you need any of my service, maybe the Signal group is just $10 monthly subscription. For those who want mentorship, for those who want short courses, it's available to everyone. So thank you very much, guys. See you on the next video.